let's take a look at debits and credits. Debits and credits, I can't begin to emphasize enough how important these are. I cannot begin to tell you how important it is for you to understand and know your debits and credits. In practice, in real life, when we're talking about someone and we're trying to say that they know their accounting or they don't know their accounting, you'll often hear the term, they don't know their debits and credits. And that simply is a reflection of just how important this is. If I talk to another accountant and I say, you know, I tried to hire a bookkeeper and it's clear that they don't know the debits and credits, it means that they don't know the fundamentals of accounting. So this is absolutely vital. If you weren't paying attention before, I suggest you pay attention now. These things are crucial. Something is, you know, I'm saying this quite a lot in terms of everything we touch, I'm saying is important. And the reason for that is what you're trying to learn and what we're trying to get across is the fundamentals of accounting. So everything you're learning here are your basic foundations of what's to come. When you get to the rest of your studies, when you get to FAC1601, they start off by saying, look at everything you learned from FAC1502. Okay, now let's carry on. So you're not going to come back and you're not going to have a chance to learn this again. You've got to get this now. Our debits and credits. The name's very old. These things, where the name and why they call them debits and credits is like asking why we call something an asset. Okay, asking why we call these things debits and credits is ridiculous. Where the name itself came from is irrelevant. What this just means and what we talk about this basically is just to indicate the sides of our general ledger. So we did look at our general ledger. We did look at that, and when we looked at the general ledger, I said to you, just ignore the little debits and credits for now. We're going to look at them later. Later is now. So our debits and credits, and what we do, we always abbreviate. We generally abbreviate our debits and credits to DR and CR, our debits and credits. What do we need to know and why do we do this? In order to complete our general ledger, we need to know the elements of the financials. We know that. We need to know our basic accounting equation. Our assets equals our equity plus our liabilities. So we've gone through that. And we need to make sure we know the debits and credits for each element. This means that for every element of your financial statements, assets, your equity, your liabilities, your income, your expenses, all of them will have different rules for your debits and credits, and you're going to have to know those rules. You're going to spend quite some time with that, but you need to make very sure that you're comfortable with the rules of the debits and credits. You've got to make very sure that you understand how the debits and credits work. So I've drawn up a little infographic that you can use, and maybe you can print it out, keep it somewhere, make sure that you're comfortable, and this is something that you're absolutely going to have to learn how this impacts it. The basic idea behind this and the basic reason that we do this is so that we, at a very quick glance, can identify whether something is increasing or decreasing that particular account. Now let's take this slowly. Remember, we looked at the double entry system and we said you need to tell and you need to be able to explain how every transaction affects the accounting equation, right? Liability. So we need to be able to identify how everything impacts. When we take a transaction, what we did was we said it's either going to increase assets or decrease assets. It's either going to increase equity or decrease equity, increase liabilities or decrease liabilities. And our little table, what we drew up, we just constantly used little pluses and minuses. But then we looked at the general ledger and we said, well, instead of doing that, because that doesn't tell you what type of asset it is, it doesn't tell you what type of liability it is, it doesn't break it down enough, it doesn't give us an indication of whether that's capital entry or a profit entry, income, expenses, we need to break this down and go into more detail. So we said that in your general ledger, we would create different asset accounts, different liability accounts, different equity accounts, income, expenses. And what we did is we said we're going to draw up our general ledger, okay, and take a look at that table. We draw up a little general ledger, and I said it's got little debits and it's got little credits. And the one example I gave you was the bank account. So when we take a look at the general ledger, what we need to do now is identify whether the bank account is increasing or decreasing. And instead of writing the bank account all down in one line that says you have increased 500 Rand, you put money in the bank and you took money out the bank, 400 Rand, and you took more money out the bank and you put more money in the bank. What we kind of think is it makes sense just to draw this all in one line and say, well, there's all your equations, or there's all your items. You put money in, you took money out, you put money in, you took money out. We don't do that in accounting. What we do is we pick a side. And in terms of the bank account, if you put it on the one side, it will be increased. And if you put it on the other side, it will represent a decrease. So that's what we're doing. It feels natural to say, well, why don't you just create a list and say up, down, plus, minus, plus, minus. It makes sense, except as accountants, we go, no, no, no. It's not that simple. We're going to show you that it's increased either by putting it on this side or that it's decreased by putting it on this side. So when we take a look at bank, when something has increased, instead of just putting it over here like this, we put it on the debit side and we say it has increased by 500 or 500 Rand, and maybe this was because you made a sale. If there is a decrease, we will represent that on that side and say it has decreased by 400. Maybe it was because you paid salaries. For example, we decreased by another 100 Rand, which means we put it underneath here again, and maybe this was for stationery. And you put another 1,000 Rand in, and maybe that was also for sales. So we say, well, we put another 1,000 Rand in. Now, as an accountant, as someone who knows what they're doing, immediately when I see this, I understand that it means that. I understand that anything that's sitting in here is because it increases the bank account, and anything that's sitting in here is because it decreases the bank account. So when we are doing our accounting, instead of doing this, all we're saying is anything that's sitting on this side is going to increase your bank account, and anything that's sitting on that side is going to decrease your bank account. So I can immediately see how much I have put in and how much I have taken out. Now remember that. The only problem with this, and the only complication that we have with this, is that each of your elements of your financial statement have their own rules. And this is where life gets a little frustrating for you, because the bank account moves in this way. The bank account, we say, if you debit it, it's a positive, and if you credit it, it's a negative. But not all of your elements move in exactly the same way. And that's where the frustration comes from, is you're going to have to learn the rules, and those rules say that assets move in one way, liabilities may move in another way, equity may move in another way, income, expenses. So you're going to have to get used to that. So they say when we're dealing with assets, and we're looking at our debits and our credits, the rule is that if it's a debit, you are increasing the asset, and if it's a credit, you are decreasing the asset. Liabilities, unfortunately, move in the opposite direction. So the rule is that your liabilities increase on the credit side and decrease on the debit side. So whenever I give you a transaction and I say to you, please can you create a general ledger account for me, your starting point will have to be, hold on, is this an asset or a liability? Because they're going to move in opposite directions. If you think about it, that's why this is so important. It's so important for you to know these rules, but it's also important for you to be able to identify between an asset and a liability. If I give you a question in the exam and I say to you, fill out this general ledger, if you put it on the wrong side, you're going to lose your marks. And you're going to have to know that this is an asset or a liability. And if you don't know which is which, you're going to put it on the wrong side because you don't know what the rule is, because you don't know whether it's an asset or liability. So this is vital for you. Equity moves in the same way as liabilities. So equity increases on the credit side and decreases on the debit side. Our income and our expenses are the last two elements we look at. So income increases on the credit side and it decreases on the debit side. Expenses, all of our different expenses, will increase on the debit side and decrease on the credit side. Those are your rules. This you write out, you print out, you think about, you look at, you learn. If I come into your house at 2 o'clock in the morning, wake you up and ask you your debits and credits, just after you've asked me what I'm doing in your house, you need to be able to answer this and tell me exactly what these are. So these are absolutely crucial. I've created an infographic for you. You can look at that, print it out, but guys, you have to know this. And you can see what we're going to do with this is say, go and fill in that general ledger entry. So if we go a little bit further back, remember the general ledger we looked at? If you apply the rules you've just learned, you can see why I put stationery on this side. Because I said to you that expenses increase on the debit side. Your bank is an asset which increases on your credit side. So you can see I've put the money in there. So your stationery is an expense which I'm showing you have increased your expenses by 500 Rand. And your bank is an asset, and I'm showing you have increased the bank by 500 Rand. Your debits and your credits. So you've got to be very sure that you know whether something is an asset or liability. And the next question you have to ask yourself is, which side does it increase and decrease on? Does it increase on the debit side or the credit side? This little dude, get very happy with this, get very comfortable with this, and you can see all the underlying knowledge that we've picked up along the way is going to come in and impact this. So we need to take a look at some more examples of how this actually works, and you're going to be spending a lot of time posting transactions to the general ledger, and you're going to be spending quite a lot of time making sure that you get that